Well, we're excited, if I haven't already told everybody this face-to-face, Molly and I are really excited to be here to talk to everybody about Majuba Hill. We're really excited to be able to talk about what we think is a major porphyry copper discovery in western Nevada. We're going to start by just talking about the reason we're here. And I just want to use this, I've had lots of discussions with everybody about copper, but I'm going to use my old man pointer to reach to that because Molly gave it to me. With China on the world stage and the use of copper, 50% of the consumption, that was a big deal. But the graph I'm really more interested in showing you is this one. And the reason I want to show you this one, everybody sees this, and we know we've got this separation of supply and demand. But if you look at this supply side, we're talking about down here what's given by the mines. We're right in this area, right in through here. This was a graph from a couple of years ago. They all look the same. But from me as a technical guy, when I look at this graph, I see this supply side, and we see this separation. We see the lack of supply coming up. And that's kind of interesting to me. But what was really more interesting to me was the numbers that are on that graph. If there's any engineers in here in this room that can tell me they can recognize what 24,000 tons means, 24,000 tons. Who knows how big 24,000 tons is? This is a pound of copper, okay? And we consume about 24,000 tons of copper in a year. But as a pound of copper, it's 55 billion pounds of copper. And we talk about 260 pounds in the motor in an EV and stuff like that, but 55 billion pounds of these copper. And the reason we don't show these things on graphs because it's difficult to construct a graph like that. You can buy this for 30 bucks and you could sell it if you were a miner for about $4. But 55 billion pounds, and so that's one of the takeaways. And then the other takeaway is this. In this shortfall right here, and this is really why we are here today with Majuba Hill. This gap in through here, where it starts getting out in through here, depending on your 26 or 28, 2026 or 2028, the distance between these bars, you look at that and you say, oh, that's about 2. That is 5 billion pounds of copper shortfall. And for those that might follow the major companies, if you were to take Freeport, for example, one of the top 3, 4 largest copper producers, that gap is the total annual production from Freeport in a year. And I don't think of it in terms of market cap. I'm not a financial guy. I can't talk to you guys financial. All I can do is talk to you about deposits and geology and how it applies. But I do know that it took, as a geologist, I follow history buff, it took 80 years to build Freeport. 80 years to build Freeport. And soon, we have to have a new Freeport every year to meet that capacity. So I think when we think about Majuba Hill, it falls into what we believe is a major copper porphyry. We believe that we will end up in this major copper porphyry setting. So we're going to address Majuba kind of with that in the beginning. Then we're going to bring in we want to do it from the geologic perspective. So to do this, we're going to use this video that which you all may or may have not seen. It's a short introductory video, and then we'll build off of this for the geology pictures, about a 3-minute video that we really like to use.
Began in the 1830s, but it took time, technology, and some modern visionaries to really get it moving. And by the end of the 20th century, the lithium battery was starting to fuel the amazing growth of the electric vehicle sector. But in the electric vehicle sector, the mineral most in demand isn't predominantly in the battery. It's in the motor and throughout the entire electrical system, because every vehicle uses copper, and lots of it. And copper plays an important role in reducing climate change through carbon reduction, and increasingly provides emerging opportunities in the health and wellness sector. So while the resource sector has shifted focus to service these new realities, the fundamentals remain the same. Prime mining-friendly location, geology, grade, infrastructure, and access to markets are the keys to success. Welcome to Majuba Hill Copper and the exciting world of copper, gold, silver opportunity. Just 120 miles northeast of the Tesla Gigafactory is our Majuba Hill Copper, Gold, Silver project. Majuba Hill is an impressive location, and even more so when you consider it has a proven history of successful exploration and production over the years. Today our interest in Majuba Hill is its exciting copper, gold, silver potential. And our asset covers over 9,600 acres that produced over 2.8 million pounds of copper with an average grade of 4% between 1907 and 1960. And now that copper is increasingly in demand, it's time to take a closer look at what this mountain of metal can bring to market. As is plain to see, shallow oxide mineralization is prominent in many locations on the property. But perhaps most importantly, drill results show an exciting, accessible deep target potential. Along with an extensive history of exploration and production, we're building an equally impressive database of sampling, geophysics, and drill results. Starting right from the surface, our core samples produced a remarkable 296 feet of 1% high-value mineralization. Our reverse circulation drilling on Majuba Extension Ridge intersected mineralization over 800 feet downhole. These results put Majuba Hill on a solid path towards outlining significant oxide copper, gold, and silver mineralization that sticks right out of the ground. And we believe that the big prize of hundreds of millions of tons of ore lays beneath our hill. Nevada is a mining-friendly region where gold is never far from your mind. And old stories talk about finding gold in some of the small underground mines at Majuba Hill. Today, our rock sampling on the surface has given us high grades from outcrops in the middle of the copper zones. And we've identified gold, copper, silver values right from the start of our Phase 1 drilling. Our upcoming plans are simple. We are executing a staged exploration program, directly targeting the original mine area and continuing to the east, to the west, and at depths below the historic workings into the very heart of the mountain. If by now you're interested in finding out more about our exciting opportunity and to meet our expert team, please visit our website at...
So I think the video does a nice, it introduces Majuba, it gives me a place to build from. There's some things that we were going to get across, and one of them is scale, to talk about scale with the porphyry copper system. This photo, it was taken from Interstate 80, 20 miles away. So if you're going up Interstate 80, you look over at Majuba. First, this is what it would look like, and it sticks up about half a mile, several thousand feet above the basin floor, mile across this direction. This is the main prominence at Majuba. This is standing on top of Majuba looking the other way, and this is a fun picture, especially when people come to the property. But this picture is really kind of the key, because when you stand on Majuba and look out here, Interstate 80 runs right along through here at the base of the mountain range on the other side, 20 miles away, and as does the Transcontinental Railroad, as does the infrastructure corridor that goes along throughout Nevada that follows the transportation corridor. So we have tremendous infrastructure. We're in the heart of the premier gold district in the world. And so that shows the scale. And then the other portion is this slide. So how do you think about Majuba as a junior company? How do we think about Majuba as a junior company? And what we did was we looked at how do you value junior companies? We looked at enterprise value is where we put it. We went out and looked at a bunch of, about a handful of producers, developing companies, early stage and early stage companies, and then tried to say, what are they worth? And what we saw was that the market, we found a number, 11 cents per pound seems to be what the credit that the companies were getting for pounds of copper in the ground. And if you look at this graph, Majuba, at this red dot over here, was getting no credit for copper in the ground. None. I mean, and we have a blue, green, and represented in blue, green, and red dots in here of copper in the ground. And so what I'm going to spend the rest of the time doing, the rocks on the table, the core that's scattered around, the stuff we're talking about is, I want to talk to you about the copper in the ground. I mean, we want to talk about the technical side, the geology that goes along with all of that. We'll come back to this graph. And so if you take, just to start, to go off into the nuts and bolts about Majuba, here's a map of Nevada, and you can see where we're located between Reno and Winnemucca. These belts, these grayed out areas in through here are belts where the major mines are located. Depending on the year, we're between 3 or 5 and 1 in terms of major mines, major gold production in Nevada. We're the biggest mines in the world when it comes to gold. So that's this part of this infrastructure story. On that video, there was a Google Earth image, and this is that same blue boundary. This gives you an idea of the scale of the project. These are square miles, okay? So that 9,600 acres that they talk about is 15 square miles. The other thing that we put on this one is we're showing this red boundary in through here. This is all of our private land, and we're 27% private. And that's a big deal when it comes to permitting. It has been a big deal for us now as we move forward, having private land operate. It doesn't give you carte blanche. The U.S., we obviously have environmental laws. That's what guides us, not mining laws. But so the private ground has made permitting easy, and as we've gone forward, as we start moving forward with our major permitting, which we have started that portion of it on the private ground, because we do deal with the state on that, it made it very simple. It's a very simple, predictable process. And then finally outlined on here in these dashed black lines are the target areas within Majuba where we're focusing and that we're going to talk more on. In the discussion I've had with all you guys, we want to define technical terms so I don't get off into the jargon, because I can really go off into the weeds, I'm telling you. And I don't want to lose you. And so there's about 5 key terms on here, and so you don't have to spend time reading them. I'll make this big red boundary. We get asked a lot about what porphyry coppers are. I've had a few definitions here that were good definitions. From my perspective, porphyry copper is the most important deposit in the world, because 65% of the world's copper comes from porphyry coppers. And beyond that, it's a 2-hour discussion to go off into the weeds about it. If we look at resource modeling, we're going to talk about resource modeling. You'll hear me talk about resource modeling. Resource modeling is really simple. It's how much metal is in the ground and how much is it worth. And here I've broken it down into what I think are the 3 key categories as an exploration geologist, as a geologist, as a project geologist, as somebody taking a project forward. First of all, we have a conceptual mineral estimate, which as a geologist, anytime I walk on the ground, I've got a conceptual mineral estimate. If there's been nothing done, I'm going to look at something and say, how much is out there? How much do I think is out there and how much can I support? Molly and I love to do geology. I mean, we love the science, but we're in the business to make money. And the people that put money into us are in the business to make money. You have to know what you think you're chasing. How much metal is in the ground and how much is it worth? And how much does it cost to get it out? So then the next category becomes this. I use this terminology very distinctly because this is what we put out in our news releases, an internal global mineral inventory estimate. Basically, that's a category of a way in which we can categorize the metal in the ground that's accepted by the regulatory bodies, and because the reason it's accepted is because we can go measure it and we can put parameters on it and we can demonstrate that that metal is in the ground. The terms that most of you are probably most familiar with would be resources and reserves. Those 2 words are key words because those have distinct regulatory language attached to them by the BCSC or ALSIM or around the world organizations that define those. And when you, at certain levels, when you get into resources and reserves, you start getting economic parameters applied. And I'm not saying that those economic parameters give you high confidence when I put high confidence. What they tell you is that you have high confidence that you're not going to be driven off because you're telling lies. They also bring up high confidence because typically there's lots of drill holes in these. The same to me within these, the mineral inventory estimate, there's lots of drill holes. This is done when you get to the bankable stages, when you start really looking at big amounts of dollars coming into a project. We use this a lot, especially now with a lot of drill holes at Majuba. We use it to drive where our exploration is going, how we see the project going, where we see the minerals developing. Mining, there's really three categories of mining that we think about, with historic underground mining, modern underground mining, and open pit mining. And I've kind of summarized them. I put grades in here to start talking about copper and percent grades. Again, when they started mining at Majuba in 1917, they didn't do it for their health. They didn't do it to keep somebody busy. They did it because they had investors, and they did it because they had to make money at it. And it was grades of about 2% copper that they required, that oxide copper that was floating around here, those blues and greens. They had to have grades of about 2% that put enough metal in the rock that they could make money at it. Most of it was done, the higher grades, because they were mining by hand. It wasn't mechanized. And then it was also being done underground because they were going after the smaller portions of it. So the modern underground mining, I use about a 1% rule of thumb in my mind for modern underground mining. It is mechanized, big equipment. It takes lots of railroads, but it still takes a ton of infrastructure to build it. Tunnels, shafts, things to get to it. So the grades still are up in the 1% range. Open pit mining, which is how we look at Majuba, because of the nature of the deposit, because of the geometry of the deposit, is something that can be done with big trucks, big equipment from the surface. In our case, where it starts at the surface, your biggest cost, the biggest infrastructure cost becomes roadways, plants, things like that. There is no going for tunnels and shafts and things like that original to get going. And I think 0.3% copper is about the lowest grade you could mine currently at these prices. Obviously, we're seeing prices increase with we're seeing these increase in prices, and that causes the grade to go down. But 0.3% copper would be about 6 pounds of copper per ton in the rock. Copper equivalent, we'll talk about copper equivalent. Copper equivalent is the combined value of all the economic metals converted to copper. When we talk about copper equivalent at Majuba, we're using copper, silver, gold, lead, zinc, and moly. We combine those metals. It's very clear when we combine them. We use metal. We do it on a metal price basis, and we state everything in copper equivalent values. And then staged exploration. Staged exploration is an important term. I'm going to use the next slide and expand on it a little bit. Staged exploration really is simply the progressive use of exploration results and the data, and we use staged explorations to follow the success. With staged exploration programs, it's to follow the success. I really think staged exploration is important, and I'm maybe not for the reasons you might think of it as an exploration geologist. I think staged exploration is important because there have been no major copper mines, no major new porphyry copper found in the next, and I've had arguments in the last 2 days with people, but I would say in the last 10 years, there's not been a major new, maybe the last 20, there's not been a major new porphyry copper deposit found. And it's also, from my mind, fairly simple. Supply met demand. We were able to meet the demand around the country, around the world. And what that means is then that the major copper mines that are working, porphyry coppers occur as a group. When you find one porphyry copper deposit, and typically in a porphyry copper district, there will be several. And most of these mines may have been identified in the 1960s and 70s. They were mined into they're being mined now. And as they went along, they started finding other deposits deeper, adjacent, things that they didn't know existed. And so the supply met the demand because the majors, the people mining those, were still able to meet the need. And as time went on, fewer and fewer dollars went out into exploration. which now, when we sit where we sit on the supply curve, might be a problem, unless you're looking for porphyry coppers, because now all of that time spent, all of that money spent by the majors to improve the technology of recoveries, I'm sure, well, we certainly watch the majors where they have pushed the grades down because they can look at lower grades. They've improved the modern technology for extraction, for mining, has come a long ways as they worked in these areas. And then the understanding of coppers has come. It's phenomenal that in the last 20 years what we know about porphyry coppers that we didn't know 20 years ago, the understanding that's out there for porphyry coppers. And so using staged exploration, following the success, using individual programs, and then it allows a junior company, a company like us, like Majuba Hill, it allows you to lever this modern technology and this modern understanding, and then to go back and take a district like Majuba, and they're out there, people around the world. There are a lot of these districts identified that didn't go into production. So you can take all of the data, and in the case of Majuba, it wasn't identified as a porphyry copper, but you look at that data and you can lever it with staged exploration. And at Majuba, particularly in the last 3 years, with each program that we deal with in our staged exploration, geology, geochemistry, geophysics, drilling, but drilling is the big one, if you're successful, then you keep stepping forward, and that's the staged exploration. And so levering that, the work that everybody did allows a company like Majuba to operate like they're big boys because we've got all this technology at our fingertips. We also happen to have, academia that is following us because they look at Majuba and they know the details of the geology, and so then they come to you and say, we would like to look at this, and so you can lever all of that with staged exploration. Okay, so let's get back to the meat here, why we're here. Again, here's the property boundary in blue, and this red outline here is the footprint of the mineralization, the total mineral inventory of the copper equivalent of mineralization that we have measured at Majuba. And you could call it a global inventory, you could call it it is not, we've had people say, oh, it's an unconstrained inventory, it's everything. It is constrained. We use the same techniques, we measure the volumes by what has been intersected in the drill hole, and that's the footprint of it. Again, remember, this is a square mile, and so this gives you an idea of the widespread nature, and you can see the controls we have. These are the drill holes that have been drilled into these areas. So let me draw your eye over here into this lower right-hand corner. Can you guys see this over here? Okay, so you go over here in this lower right-hand corner. If we were driving up to Majuba, when we showed the picture from 20 miles away across I-80, if you were driving in on this road, this is the picture you would see as you come in. You can see Majuba Mountain sticking up above, Majuba Hill, actually, to be specific, to name it specifically, but you can see it sticking up above the ground. Your first reaction is going to be, well, it is bigger than I thought as you get close to it. You've got a mile across the base here. What Molly and I would see as the geologists on the project, what we see is this red area in through here. And what that represents is when we look at that, we really see the mountain of copper. The term mountain of copper actually came from a videographer that put this video together. He said, well, it's kind of like a mountain of copper. And it was like, at the time, we didn't have the deep drill holes we have, but it's like, yeah, it is like a mountain of copper. And now, when we drive up, this is what my eye sees as a geologist. Takes all of that data that we have put together, that all it put together is the project, we see this copper in through here. The other thing I want to point to on this slide is that oxide, somebody hold up that little piece of core right there, that one, the yellow one. That's the oxide stuff. That's what we've drilled. I mean, that is this core right in through here. And this is what came right off the top of the mountain. As we go down through these, as we start looking at the project progressively, we'll show where this is occurring. And so the last thing I'm going to show, and I'm going to talk about a cross-section. A cross-section, to keep out of the jargon world, a cross-section. A cross-section is really a slice through the earth, and it's along this line. We're going to look at cross-sections along this line. If you stood on the south rim of the Grand Canyon and looked over at the north rim, you would see a slice through the earth, top to bottom. That's the cross-section, and that's what we're going to look at along, we're going to look along that line. This is a generalized cross-section. This one is, it started out as a cartoon section. In fact, this is actually a fairly detailed section that we have kept in a generalized format. It may not look generalized to you because it's got all these colors going everywhere. So the thing I want you to see when I show you this particular section, what I really want you to see is this boundary in through here. And that footprint that I showed of the 1.5 billion pounds of copper in the copper equivalent measurement, 1.5 billion pounds, this is what a slice of it would look like. That's about 1.5 miles across here, and it's about 3,000 feet from bottom to top. It's jagged at the bottom down in through here because we have a lot of geophysical evidence and we have deep drill holes that come down this deep that tell us we don't yet know where the bottom is. And all of that, just to recap momentarily, is scale. This puts us in the scale category. The other thing on here is you see these two different colors, and you may not be able to see these two different colors. That's kind of intentional on my part because I want you to see the total mineralization, but I've got these arrows pointing. So here's this oxide copper. This is where the old timers went in. They mined the very high grades at the top, underground, because that's what paid the bills. When you start seeing the native copper, and there's a native copper piece sitting right on through there. This is a piece from right around that slab. The native copper, they never mined that deep. They did not get that deep down to that. We identified that in drilling. And it's interesting to us, as I've talked to a couple of you, it's interesting because of the occurrence of native copper. It has implications about how rich this copper system would have been, how much copper was in it. What it really implies to us is it forms a boundary because of the way the native copper is formed right in this area, and that piece is from about 900 feet below the surface, and it gives us a boundary before we start going into the chalcopyrite that we see in the sulfide, in the sulfide portion of Majuba. We get down into the chalcopyrite, and this is a picture here. I'll have a different picture, and there's a crumbly piece that we've got on this table over here of what this looks like. But I've outlined in here the sulfides that you start to see in there. You don't see these reds and greens. The grades that we look at when we see these sulfides are in the 0.6% range. As I said earlier, open pit 0.3, if you have an overall 0.3%, I think it's an open pittable terrain in western Nevada. And we've intersected the stuff like that, and so that's why I start showing it right in through here to show the kind of the two different styles of mineralization and the break between them. Photos. So drill rigs. I know somebody, Penny, right? We talked about core. Yeah. Okay. So this is just, first of all, if you look at these rigs, I'm going to tell you, you can't tell the difference between a core rig and an RC rig. The ones we use, they look the same. So you can't tell the difference there. What you can tell the difference on is an RC rig, reverse circulation rig, it chops up the rock, it grinds them up into, it makes little bitty fine pieces. This is a sieve about that big around. That's how we catch and wash the sample when it comes out of the drill rig. When you look at that core, when you drill through this mineralization, the oxides, the enriched oxides like that core shows, it's still just as exciting. You can see the look on the driller's face. When you drill the core of this stuff, the driller gets excited because the geologist is excited, but the geologist is excited because then we can look at the rock. We can start to see the rock. We can start to see the fractures. I've talked to a few of you about the fractures that we see, but we can actually start to see the rock and we can identify the pieces going in the rock. Then we can start to really put the puzzle pieces together. And so I'm going to delve off into the weeds a little bit. This is that sulfide that we hit, that there's a half of the core over there, and along these fractures right in through here, this is a mix of pyrite and chalcopyrite. This piece actually runs like 0.38%, I think this one runs. And that really, when we got that at Majuba, we knew then that we were starting to see grades that were going to give us the scale to be able to get to a place like where we are here today to talk about this way to anybody. And a little more, to really move into the weeds, these little black fractures that you see in through here, and there's two things. If you looked at this close, you can see the shinies in through here. I don't know how well it's showing up, but this rock had little specks all through it of the chalcopyrite, the copper, that were disseminated throughout this rock. And then you can see this white fracture along in through here, and you can see these black fractures. I mean, I look at that, when we started seeing that, I look at that and it's like, the driller's looking, he can't figure out why I'm so excited because I'm not looking at the native copper, and Molly's over there going, with her hand lens, and you're looking at it going, oh my goodness, this is not what you normally would expect in these rocks. This is what you would expect in a porphyry copper system at depth. So now, I was going to tell you all about how you haul trucks in, use trucks to haul equipment in, to explain the logistics of what we do. But out of the deep drill holes we've just finished, we are now intersecting veins that look like this. And you can see these little black lines, you can trust me and say, oh yeah, that's a vein. But when you start to see things like this, where you've got these fractures cross-cut going through here, and then there's fractures like that cross-cut it, and fractures that come into it and are offset by it, these are things that, when you start to see these at this scale, and then when they start overlapping and you have a bunch of them together, now you have turned the corner. You're no longer searching to say, well, is this going to make it, or is it? It is how and where is this going to make it? And this is the part now, so I'm going to get out of the weeds before I go any further, but this is the rock that, when I look at it as a geologist, with everything we had in copper, we really realize that now we're onto the meat of Majuba. Let's see here. Okay, another cross section. Way in the weeds cross section. I'm not going to go into this. If I was doing a detailed due diligence, I would use this, because this is that same cross section that I drew before, but this has got Majuba as the background, and I've got all of the drill holes, or I have a lot of the drill holes in this area superimposed on this. The takeaway for you guys on this is these green and red bars. These are done with copper equivalents to show the intervals of mineralization in through here. They're done with copper equivalents because we were working at pulling together to look at the influence of the other metals, but they're showing the thicknesses of mineralization. On the next slide, I'll show you a summary, but just remember, this means that when we drilled that, with the other half of the core that's missing was analyzed, and that's how thick the zones of mineralization are that we're getting. If I summarize that, this is the summary that comes out of it for us, and this is the story that we want to leave with you today. When we look, first of all, we start saying, okay, this is where we would sketch a pit in for this upper zone of mineralization based on those bars. Okay, this is where, when we look at the 3D modeling, when we look at the volumes of the mineralization, this is where we would put the pit. And we'll look at the 3D model here in a moment to look at that. But, so that's one takeaway from this summary slide is roughly, you can see, as we look at the value of the mineralization, we say, yeah, it looks like you could take off the top of Majuba Mountain with that. The mineralization then that came out of these last 3 deep drill holes, which we'll be releasing the results in January on the 3 drill holes, and it'll be coming out with the assays and how they fit together with the veining. That will be the discussion, but so we're still working our way through this last hole 29, where you saw a picture of the piece of it. But the two holes I've highlighted here, they did two things. First of all, they extended the mineralization up here. It was because of these two holes that we can now start to sketch this pit in. We have started the modeling process, working with, to do a resource reserve model that would be a more economic related thing. And then down deep where we started seeing this veining, these holes that intersected it, they have extended it from where we were before. And that's then where we can look at the scale and say, we have this corridor, this is where we're pushing out on this corridor. And again, just for visual purposes to keep us on track, this is where the old timers mined, this is where the underground was. So when we say the top of the mountain, it's right in there. And then here you can see the native copper. This is about where this native copper was intersected in through here. There's actually two levels of it. There's another level of native copper that's down a little bit deeper. Another high-grade group of photos just to give you an idea of, here's 30 feet. Like this was some of the early holes that were drilled right in around where the workings were, where some of that stuff came from. Had 200 feet of 2% copper equivalent, roughly 199 feet of 1.04% copper, and then the copper equivalent came in at 1.8. Mostly silver drove that because this is it's the enriched portion of it, and the silver really comes out in the enriched portion of Majuba. This is what some of the core looks like when you're. This would probably run 1 to 4%. This stuff that's kind of more browns and not near as much of the blues and greens. This is what a core box, 3 core boxes would look like. That's 3 core boxes full of it. That zone, that's within that 200 feet of 1%. Okay, so this is a segue map to the 3D. On this one, I put this circular boundary on here. I put the circular boundary on here just to use when we go into the 3D model, just to keep scale in mind. Again, this is the footprint of the copper equivalent, what comes in as a 1.5 billion pounds. It's about of copper equivalent, and then we'll look at the model through that. So you can follow this circle, 1.5 miles across on this circle, and let's see if we get this. We'll put this 3D on here. I'll do this twice because it's going to go fast enough that I don't see everything as it goes through. So we'll let this model rotate. Gonna have to come over here on this one. Let's do it this way, Mom. So this is the 3D model, and the magentas and the reds on there are the volumes that where we have gone in and calculated. We've taken like a bunch of little sugar cubes and stacked them all up around the drill hole intercepts, and those are the volumes where I'm speaking in pounds for a reason. We're using 55 billion of these a year. That's what 1.5 billion pounds of copper looks like. It's about, and so I'll rotate it again though, so there's something else that I want you to watch for on that would be the drill holes on there. These little black lines that you see sticking around, you'll see the drill holes in there. And when I talk about staged exploration and follow the success, pretty much every place we've drilled a hole at Majuba, we get into the copper. And so when you look at this, where we don't have modeled it, we have only measured what's red in there. So watch where those drill holes are. And you can see where they're occurring and where there's mineralization, and then you see the gaps in these things, and then you see that circle. So we looked out in this area, so you can see we've really drilled right in through here. So we have this measured, we have this copper on the ground, which brings me back to our enterprise value graph. And as I said, we're not financial people, but when I look at it using this blue point, this red, this green, and this red, and say, okay, right now, Majuba, at whatever the, you know, the 19 cents or 16 cents, wherever it is, gets no credit for any copper in the ground, no credit. And yet, we've measured, you know, here, even at our most conservative valuation, at our most conservative mineral estimate, the gross metal value is 500 million. The enterprise value, using 11 cents a pound for copper in the ground, is 17 million. It's 2.5 times current market cap. In the middle inventory, not getting way out, way deep, using the copper equivalent, just using copper, even here, we're at a enterprise value of 50 million, which is significantly more, to me, than what the market is valuing Majuba at. That's why it really becomes, geologically, for us as geologists, obviously we're excited about it. We like the rocks. We really like the rocks. And we've got a lot of people, as they come around, academics, industry, that look at this and go, really, at Majuba? And you think about leveraging technology is one thing. Leveraging knowledge is something else. And I think Majuba is a classic case of where we're going in the copper business anyway. You're going to be finding these hidden deposits. You're going to be finding them in districts. Obviously, people are exploring all through the districts. But for us to be in western Nevada, out here, in a place that, if you want to have discussions about why I think Majuba's along the western side of Nevada, I'm glad to regale you with tectonics and talk to you about all of that. But we think that is what is really exciting about Majuba from a geologic viewpoint, from a scientist's perspective, and from an economic perspective, because western Nevada is a big place and we're a mining state. And so I think that this graph is really one of the compelling graphs for a junior company. We, the legalese, forward-looking statement for us, for Bam Bam. I think everybody just signed that. So we've got that. So I'll leave you with this. Open it to questions. This is the companies that we talked about. There's the graph that it came from. And obviously, we're, any questions, we'd be glad to answer questions.